It's February 16th, 2026. Right now, as you're watching this, the world's largest physical silver market is completely offline. Shanghai, the city that controls the heartbeat of global silver demand, has gone dark for the Lunar New Year. And here's what they're not telling you. This isn't just a holiday. This is a controlled blackout. 43 days ago, silver hit 121.64 per ounce, the highest price in recorded history. Then, in 28 minutes, it crashed 30%. Traders watching their screens thought they were having a stroke. Verify this yourself. Go to Trading Economics. Pull up the January 29th chart. You'll see the vertical line that broke the market. Today, silver sits at $77. But here's the kicker. While China sleeps, the Western paper markets get to decide what your metal is worth. No physical buyers, no Shanghai premium. Just algorithms and leverage. This is the Shanghai vacuum. By the time the East wakes up on February 24th, everything could change. History doesn't repeat, but it sure as hell rhymes. Let me take you back to 1893, the year America learned what happens when governments manipulate silver supply. Back then, the US government maintained artificial silver prices under something called bimetallism. Basically, they promised to keep silver valuable by law. Congress passed the Sherman Silver Purchase Act, forcing the Treasury to buy millions of ounces every month. Sound familiar? Then reality hit. The Panic of 1893 erupted when European investors realized US silver reserves couldn't back the promises. Banks collapsed. Railroads failed. Over 15,000 businesses went under. The Depression lasted 4 years. Fast forward 133 years. Different players, same game. Except now it's not the US government buying silver, it's China. And on December 30th, 2025, Beijing did something that should have made every investor on Earth pay attention. They weaponized silver. New export licensing rules. Only 44 approved companies can ship silver out of China for the next 2 years. Verify the Reuters report yourself. It's public record. They're treating silver like a defense metal now, right alongside rare earths. The 1893 lesson? When supply gets political, markets get violent. And brother, we're living through Silver Panic 2.0. Let's talk numbers, real numbers. February 2026 numbers. United States, the Trump administration just launched Project Vault, a $12 billion strategic mineral reserve. Here's the breakdown. $10 billion from the Export-Import Bank, plus $2 billion private capital. Announced February 2nd in the Oval Office. You can watch the CSIS policy briefing yourself. Why does this matter? Because for the first time in modern history, the US government is acting as a buyer of last resort for silver. They're trying to build their own Shanghai-style physical floor. Boeing, General Motors, Google, they're all buying into this insurance policy because they know China controls the supply chain. The US imported roughly 3,200 metric tons of silver for industrial use in 2025. Solar panels alone ate up 35% of that. But here's the problem. Domestic silver production is flat. We're mining about 950 tons annually. The math doesn't work. United Kingdom, Britain's in even worse shape. The UK has 0 primary silver mines. Every ounce is imported. London's the home of the LBMA, the London Bullion Market Association, the paper trading hub. But the physical metal? It comes from somewhere else. In 2025, UK industrial silver demand hit 180 tons, driven by electronics and medical devices. The national grid's push for solar added another 25 tons. But when Shanghai closed this week, London traders faced a liquidity crisis. The bid-ask spread, the gap between buy and sell prices, tripled overnight. Verify it. Bullion Vault's report from February 16th confirms the market is technically fragile. Germany. Germany's the industrial powerhouse of Europe, and they're addicted to silver. Annual consumption, roughly 600 tons. Automotive sector takes 40% of that. Every electric vehicle uses 25-50 grams of silver in electronics and motors. But here's the crisis. Germany's silver imports from China dropped 18% after the January 1st export controls kicked in. Verify the European Commission trade data. It's publicly available. German manufacturers are now bidding $5, $7 over spot price just to secure physical delivery. BMW, Volkswagen, Siemens, they're all feeling the squeeze. And while Shanghai's offline this week, they're at the mercy of COMEX paper contracts. No physical bid from China means no price floor. The global picture. The Silver Institute projects industrial demand at 650 million ounces globally for 2026. Solar alone will consume 210 million ounces. AI data centers, those energy-hungry server farms powering ChatGPT and autonomous vehicles, are adding another 35 million ounces annually. Supply? About 880 million ounces from mining and recycling. That's a 170 million ounce deficit. The 6th consecutive year of structural shortage. Verify it yourself. The Silver Institute publishes these numbers every quarter. This isn't speculation. This is public record. So what happens next? Let me give you 2 scenarios. and both are backed by current momentum. Shanghai reopens on February 24th. But what if Chinese buyers don't show up? What if Beijing's export controls have locked up domestic supply so tightly that the Shanghai Futures Exchange becomes a ghost market? Right now, SHFE silver inventory sits at 353 tons. That's down 88% from the 3,000-ton peak in 2021. CEIC data confirms this. I'm not making it up. If that inventory doesn't move, the Shanghai premium evaporates. Meanwhile, the CME just hiked margin requirements to 18%. That means leveraged traders need 18 cents of collateral for every dollar they're betting on silver. In January, it was 15%. In December, it was 12%. When margins rise, traders deleverage. They're forced to close positions. And when everyone's selling at once, liquidity vanishes. We saw this on February 6th. Silver touched $64 intraday. If COMEX breaks the $70 support level this week, algorithmic sell triggers could push us toward $50 before human traders even wake up. Verify the $70 support level yourself. Pull up TradingView. Look at the 200-day moving average. It's sitting right there like a trap door. But here's the flip side. What if investors realize that the physical supply is gone? Think about it. SHFE inventory down 88%. China's export controls locking up domestic supply. U.S. Project Vault trying to hoard 60 critical minerals. Germany paying $5, $7 premiums just to get delivery. When Shanghai reopens on February 24th, we could see a snapback effect. 8 days of built-up demand hitting the market all at once. Chinese buyers waking up to see Western paper traders push the price down without physical metal backing. History shows us what happens in backwardation markets, when near-term prices trade higher than future prices because everyone wants the metal now. Bloomberg confirmed on February 11th that Shanghai silver is in record backwardation. If the physical shortage is as tight as the data suggests, and I've given you 6 independent sources to verify, we could see a fear rally toward $150, maybe $200 before summer. Steve Penny from Silver Chartist. Com studied the 1970s silver bull market. He told NASDAQ on January 26th, we might go up to $150. Not necessarily predicting that, but it's possible with this kind of momentum. Verify his interview yourself. NASDAQ published the transcript. But there's a third factor nobody's talking about loudly enough. The BRICS unit currency. In late 2025, BRICS nations, Brazil, Russia, India, China, South Africa, unveiled a prototype digital settlement currency backed 40% by gold and the rest by member currencies. It's not a full currency yet, but it's a trade settlement tool designed to bypass the US dollar. India's central bank proposed in January 2026, linking BRICS digital currencies to facilitate cross-border trade. Verify the Reuters report from January 19th. Why does this matter for silver? Because if BRICS nations start settling trade in a gold and commodity-backed unit, demand for dollar-denominated assets drops. And when the dollar weakens, hard assets like silver surge. We're not just watching a commodity market. We're watching a monetary system shift in real time. So here's your action plan for the next 8 days while Shanghai's dark. Watch the $70 level. If COMEX silver breaks below 70 on low volume, meaning nobody's buying the dip, we're headed for the 50 panic zone. Set price alerts. Don't guess. Watch Project Vault developments. The Trump administration is hosting a critical minerals ministerial on February 18th. If they announce new stockpile targets or emergency buying, that's a bullish signal for physical demand. Watch Shanghai inventory data. CEIC publishes SHFE warehouse stocks every Thursday. When trading resumes on February 24th, if that 353-ton inventory drops instead of rising, it confirms the physical squeeze is tightening. Watch CME margin announcements. If they hike margins a fourth time, leveraged longs will capitulate. That's your signal for short-term downside. And most importantly, don't trust the narrative. Verify everything. I've given you 8 independent sources in this video. Reuters, Bloomberg, CSIS, Trading Economics, CEIC, the State Department, Shanghai Gold Exchange official notices. Go read them yourself. Don't take my word for it. Don't take anyone's word for it. This isn't about predicting the future. It's about understanding the mechanics of a market under geopolitical stress. Silver in 2026 isn't a commodity anymore. It's a proxy for the new Cold War, and the battlefield is the periodic table. When China sleeps, the paper markets play. But when the East wakes up, the physical reality reasserts itself. We're about to find out which one wins. If you found this investigative breakdown valuable, hit the subscribe button and turn on notifications. And next week, we are diving into the BRICS unit currency mechanics, how a 40% gold-backed digital settlement tool could break the petrodollar system. We're also tracking Project Vault's first purchases. Which minerals are they buying? At what prices? And who's getting the contracts? This is investigative financial journalism. No hype, no predictions, just verified data, opposing viewpoints, and the questions mainstream media won't ask. Share this video with anyone who thinks they understand what's happening in precious metals. Because I guarantee you, they don't know about the Shanghai vacuum. This is real-time financial intelligence. Stay sharp, stay skeptical, stay informed. Resume trading, February 24th, 2026.